So what are some ways in which you can avoid an underpayment tax penalty? Well, first and foremost is make accurate estimated tax payments. The way to technically do this, sort of the Boy Scout way, is to file what are called 1040-ES calculations every quarter. Now, it's not really every quarter. The IRS has its own schedule, which I'll link down below. But the Boy Scout way of doing the math is to do a 1040-ES every quarter that you have income, and that'll estimate the taxes owed. That doesn't guarantee you won't owe, nor does it negate you being entitled to a refund at the end of the year. This simply just helps you avoid an underpayment tax penalty. That's a lot of work, so in my opinion, I'd rather a client execute what's called a safe harbor strategy, where the simplest way is if your adjusted gross income is below 150 grand, take 100% of the taxes owed last year and divide that by 4, and those are your installment payments this year. Again, that doesn't guarantee you won't owe anything at the end of the year. It just guarantees you won't have an underpayment tax penalty. If your AGI last year was above $150,000, then you'd take 110% of the taxes owed last year divided by 4, and those are your installment payments to the IRS. Lastly, if you're compensated by W-2 income or pension income or income withdrawals from a retirement account, for example, I would just speak with payroll or the investment custodian to increase your withholding moving forward to avoid underpaying the IRS the schedule that you're supposed to be paying them.